IREDA is on our radar. Our colleague Rachana caught up with Pradip Kumar, the chairman and MD IREDA, to discuss their business outlook and asset quality picture post the Gensol engineering fiasco. Let's listen in to excerpts from that conversation.
Competition is coming quite a lot in the vanilla iris segment. Since the sector is matured, like us, bank, other NBFCs, they are feeling quite comfortable now to lend in that space. But that is the role IREDA need to play. IREDA being the sole arm of MNRE, which is having capability to understand the nuances of new and emerging IRE and handhold the industry from a nascent stage to a maturity stage in due course of time. Till such time, this kind of flip-flops happens. Provision going up, NP emerging, but in due course of time, those get sorted out. One example, if I'll share with you, that replies everything with respect to our provisioning and asset quality. In last 38 years, we have financed more than 1.62 lakh crores, and our asset quality is so robust. The cumulative write-off so far in 38 years is just 135 crore. So provisioning, NPA, just a kind of temporary phenomenon in the history of IREDA so far, and we believe we can sustain that kind of quality in time to come.
Okay. You mentioned Gensol. You've moved to DRT for the Gensol 729 crore fiasco that took place. How relative is this exposure to your loan book? And apart from that, you mentioned a similar risk that you saw in an Andhra PBI. Can you give us, can you quantify that also for us?
No, first, I did not say similar. It's quite different. Okay. Andhra was a PPA where the government decided, Andhra government decided to reprice the PPA, almost half of it. And what I was told that though they reduced to half, but still they did not pay also the half what they had reduced. So not only the total revenue got reduced, even the cash flow 50% what they had to get, that was not happening. Gensol is completely different. So far, as per the investigation is going on by the various agencies, including IREDA, preliminary report what we have received, that is purely the promoters' misgovernance. Complete corporate governance lapses, and maybe the mismanagement of their greed and need that has resulted in such kind of thing. But otherwise, if you look at that, unlike this PPA designer of Andhra, in case of this Andhra project, what I said, which has become NPA now, it is a sectoral issue and a call even by state government. Here it is not like that. There is absolutely no problem in the sector. The company was doing fantastic. We had lended them almost 3 years back. And many of our loans have been repaid in last 3 years, and some of the loans also have been repaid in last 2 years. So typically we lended for 5 years. Normally it's the e-car loans. And since, as per our assessment and what market indicates also, fair amount of good opportunities there in that sector, that space. And not only DRT, we have also gone to NCLT. See, I want to emphasize one point. We are the first agency who could approach to NCLT and get the application admitted, get the IRP appointed. The IRP has already done the COC meeting. Hopefully by today, this COC should get meeting minutized, and IRP may get approval to become IRP. They have already started the principal working. See, this kind of thing is not quite well known in India, since e-mobility is new and emerging. And we do not have such kind of bad assets example in India. So therefore, any IRP or RP, whoever comes to take it, they will take some time. But since this business is not that complicated, running a car is not that difficult, unlike running a thermal project or XYZ project. So therefore, we are confident it is just a question of months. And as the initial indication they have given, so they are trying to bring back those cars on the road, and once it's happening, then the provisioning what we have made, we may not have to require to continue that also.
Right. You recently had a 5,000 crore rupee QIP. How are those funds being allocated?
We did not have 5,000 crore. We had 2,000 crore. Okay. So the approval from Government of India was 5% of post-issue dilution. 3.26% has been diluted, and 2,005 crore we have already raised. And it was raised at the rate of 164, 165, something like that. And despite the market is not doing well, and despite having this Gensol fiasco, which you said, and we could successfully complete our QIP tranche 1 and balance 3.76%, which is available to us for further dilution by raising fresh funds through QIP tranche 2. We are in the pipeline, and we'll be waiting for the right time, not only market condition, our requirement also. Hopefully we'll be successful in that also, and that may add around 3,000. The 5,000 figure what you said, then it will become 5,000. Yeah.
What's the priority for this fund allocation? Are you looking to scale up in particular sectors? Are you shifting towards a specificity of EV hydrogen?
We are only in one sector, that is RE, and we are king in that. We are founder of that, I should say. Many a times we call ourselves that we are mother organization as far as RE financing in the country. So any equity infusion or any debt additions and all, we'll be spending in RE only. And coming back to the composition, what I understand that you are asking the asset mix. Since the trend 2-3 years is going on like that, 50-51% is coming from traditional RE, that we need to continue in the same manner. The reason is, in vanilla RE, you have fair amount of de-risked assets. And government loans, you have completely de-risked assets so far, unless the government becomes something like the way some state government decided something. But 76% are vanilla or risk-free assets so far, what we have maintained. And same kind of trend is going to be continued. 21-22% is completely new and emerging. That we also need to continue, because there only we get fair amount of good spread and NIM, which averages out. And if you see 3.667 NIM, still we are having, despite all the competition from the new RE financer in the country, despite the competitive market. And typically in RE assets, till the construction period, the risk is there. Post commissioning, and once the COD happens and 1 year of trial run happens, by that time it is fairly de-risked, then many lenders are there.
All right, those are some of the comments coming in from IREDA. With that, we'll slip into a short break. Richard Jain of Motilal Oswal will join us on the other side for a technical check.